but the market is pricing in the summer, right? The summer of 2022. Do you think the market is being aggressive?
We do, yeah. We think the market's a little too eager. And I do think that was part of the chairman's message and the FOMC in general, is to try to quell those expectations, but not directly do it. It's kind of an indirect or gentle pushback against the markets. We think it's too early because we think that as the chairman laid out, we think that inflation should subside by the middle of next year. And as inflation comes down, they can continue to work towards that maximum employment goal.
I just want to understand, Kathy, from you, do you think that it is time, and I don't know whether the market chatter is gaining ground on this one, but growing louder, that is it time to drop the word transitory from the statement altogether?
Well, that's one of the most, I guess, hated words, frankly, or overused words. But it was still in the statement, and I think from a tactical sense, they had to. But because if they removed it, it may give the markets the green light to go ahead and price in even more Fed rate expectations and tightening. So I think keeping it in was necessary, but what they did was qualify and say they expect the inflation run-up to be transitory. So sort of hedging their bets a bit and then giving a fuller explanation and spending a little bit more time on the supply-demand imbalances and talking about the supply chain effects.
Now, I wonder what the chatter is on the ground with regards to how steep could this rate tightening cycle be? Could this tightening cycle be essentially? Do you think they could go fast once they get off and get out of the gate?
So our view is they go very slow, particularly versus previous tightening cycles, and we think that they end rather low. We see the the end rate somewhere around 2%. Fed's a little bit higher at 2.5%, but interestingly, the market has actually lowered the end point to 1.7%. So that's dropped 30 basis points in just the last week. So what the market is saying, they're going to go fast and early, but end at a lower point. So it'll be quite interesting to see how that plays out. But we think gradual and slow. Again, that's predicated very much on inflation expectations remaining anchored, and that you do see some easing of inflation pressures by the middle of next year. Now, I'd just like to add that we actually think inflation is going to get worse in the fourth quarter and first quarter before it starts to moderate.